First item of business will be bill introductions. I'd like to recognize Steve Carney.
Thank you, Chairman, members of the committee. I'm here to request introduction of 21 RS 0652. It's related to tax credits for contributions to technical colleges.
Might ask you to speak a little bit closer to the mic. What was the last part?
Yeah, it's related to tax credits for technical colleges.
Yes, thank you. Committee, any questions? Any objection to the request? Seeing none, the request is approved. Thank you.
Great.
Scott, would you like to come forward?
Mr. Chair, members of the committee, I'm Scott Schneider here on behalf of the Kansas Restaurant and Hospitality Association. I'd like to introduce a bill 21 RS 0971, and it fully eliminates the prohibition on credit card surcharges.
Committee, any questions? Representative Turner.
Said it eliminates the prohibition on. Could you clarify?
Yes, so you're going to work a bill today, as I understand it, that partially eliminates the surcharge prohibition. The bill that I'm introducing it would impact not just the colleges, not-for-profit colleges, but for every business. There has been some law that's changed. The Supreme Court, we think, is very relevant, and we'd sure like an opportunity to discuss that broadly. We're the 4 states that haven't done this, and we'd sure like an opportunity to talk about it with respect to every credit card processor.
So that would give all businesses the opportunity to charge additional if you use credit rather than cash. Is that correct?
Correct.
Thank you. Committee, any further questions? Seeing none, any objection to the request? Seeing none, the request is approved. Thank you. Representative Baker, you are virtually, did you have a bill request?
Yes, I do. Can you hear me?
Yes, loud and clear. Go ahead.
Great. So it is 21 RS 0626, and it's an act concerning income taxation relating to tax credits, providing a credit for expenditures for placing into service qualified alternative fueling stations. And what that will be is a robust discussion about electrification of electric cars and how we're going to fuel electric cars as we go forward.
Thank you, Representative Baker. Committee, any questions? Seeing none, any objection? Seeing none, the request is approved.
Thank you.
Representative Gardner.
Thank you, Mr. Chairman. I do have a bill. This is for Representative Elizabeth Bishop, who is in Insurance Committee. The number is 21 RS 1023, and it is a sales tax exemption for active aging publishing corporations, which are 501c3s.
Thank you. Committee, any questions? Any objection? Seeing none, the request is approved. Any further bill introductions? Seeing none, we will close that section of the meeting, and we will open up the hearing for Senate Bill 47. And I would turn to the reviser for a brief overview.
Thank you, Mr. Chairman. Senate Bill 47 would enact the Kansas Taxpayer Protection Act. This relates to the actions of paid tax return preparers who assist with filing income tax returns or refunds for claims in Kansas. The language of this bill is identical to, I believe, a bill filed in the House Tax Committee. It's also identical to language that's been, from prior year's bills. The act requires that paid tax return preparers to include on any income tax return or claim for return their signature and their federal Internal Revenue Service identification number. The act imposes a civil penalty of $50 on each paid tax return preparer who fails to do so. Also, the act would authorize the Secretary of Revenue to bring civil actions to enjoin the paid tax return preparer from engaging in prohibited conduct. And with that, I'd be happy to stand for any questions.
Thank you, Adam. Committee, any questions for the reviser? Seeing none, thank you, Adam. Kathleen Smith with Department of Revenue, is there anything you would like to address regarding the fiscal note on Senate Bill 47?
Mr. Chairman and members of the committee, my name is Kathleen Smith with the Department of Revenue. On Senate Bill 47, we are indicating that it would increase state general fund revenues. However, we don't have the data on the amount of the potential violations, so we're not able to estimate what the fiscal impact will be. With that, I would stand for questions.
Thank you, Kathleen. Committee, any questions? Seeing none, we will move on to our first proponent. I'd like to welcome to committee Jeremy Stows, Director of Government Relations for H&R Block, joining us via WebEx. Jeremy, can you hear us?
I can. Can you hear me?
Yes, loud and clear.
Excellent. Thank you. Thank you, Mr. Chairman and members of the committee. My name is Jeremy Stows. I direct state government relations for H&R Block. I was born and raised in Marysville. I live in Shawnee. I work out of H&R Block's world headquarters in Kansas City. And on behalf of all of us in those headquarters who call Kansas home, and including our folks and about 130 H&R Block offices across the state, really appreciate the chance to be with you all, at least virtually today, to express our strong support for Senate Bill 47. This bill is non-controversial. Last week, it passed the Senate on a vote of 39-0. As was mentioned last year, it was considered by this committee without objection and passed the House on a vote of 118-1. Unfortunately, it did not make it across the finish line after being combined with some additional measures. It's endorsed by groups like Americans for Tax Reform. We've worked really closely with other groups in the tax practitioner community in Kansas, like the CPAs and the public accountants, to make sure that everyone is good with it. And all told, in about the last 4 years, 13 states have enacted similar legislations, including our neighbors to the east in Missouri, as well as Iowa. This Friday, tax season begins for America, and during tax season, most Kansans will seek the assistance of a paid income tax return preparer in order to prepare and file their taxes. And most of these preparers, they act professionally. They're competent and they're ethical. That said, really anyone can call themselves a tax return preparer. There's no training requirements or education or background checks or anything along those lines. And anytime you're dealing with a large sum of money, it does open up the system from abuse from a small number of preparers. And often at H&R Block, we see these as, we call them fly-by-night operators. They'll hang out a shingle on Friday. They'll be gone on April 16th if that's the end of tax season this year. And we see these as they come into our offices to individuals seeking to get their returns corrected. I would say at best, a lot of folks will have inaccurate returns. At worst, their refunds are being stolen. And so over the last few years, I've worked with a number of states to try to come up with a fairly simple oversight solution and one that doesn't burden the current system. And that's what's in front of us today with Senate Bill 47. And I'd like to be clear, if you're, this legislation doesn't impact you if you're a volunteer tax preparer. Say you're helping out senior citizens with their tax returns, or you're helping your 18-year-old son file his taxes. This legislation won't impact you. If you're a legitimate paid preparer, this legislation has very, very little impact on you because the one requirement of having an identification number through the IRS is already a federal requirement that's in place right now to prepare federal tax returns. And so very little to no impact on legitimate tax preparers either. But what the bill does do is it gives the state some additional tools to better identify and stop the bad actors. And we at H&R Block, we think this is an important protection that we think Kansas taxpayers would also benefit from, and we encourage this passage, and I'm happy to take any questions.
Thank you. Committee, any questions? Representative Highland.
Thank you, Mr. Chairman. How big a problem is this in our state?
Yeah, it's a good question. I don't have a lot of numbers data, but I can tell you that it's something that when I talk to our tax preparers in Kansas on the front line, it's something that they see. Usually later on in the tax season, as I mentioned before, as they work to fix these returns. I've also, we've worked with the DOR on this issue at the Revenue Department, and they see the same problems on their end as well, as you would expect. In a lot of cases, it's fraud and folks that are falsely inflating tax returns, either preparers are doing it with or without taxpayers' knowledge. And and ultimately having money stolen from the state of Kansas.
Mr. Chairman.
I could just kind of do a follow-up off of that. Do you see this more prevalent in actual brick and mortar businesses where somebody is coming in and setting up, as you said, a very temporary location, or do you see some online fraud and online tax preparation? What is most prevalent in these states that have went ahead and enacted this? I think you said there was 13 states.
That's correct. Yeah. So the 13 states that have enacted this they're seeking to sort of catch up. I would say the online fraud is a huge issue, and one that the tax preparation industry, the IRS, the state revenue departments have really the software providers have really worked together over the last few years to put in place a number of really important controls. And so that's where a lot of the activity has been. The states that have been enacting this have been trying to catch up on the other side, on the retail tax preparation side, to put in place some additional controls for to address that problem. I'll give you an example. Louisiana was probably the first state to enact this several years ago. They were trying to stop prisoners from preparing fraudulent tax returns in their state prisons, and so yeah, it's this addresses the retail side, the actual assisted tax preparation channel, in part catching up on a lot of the work that's been done on the online do-it-yourself tax preparation channel.
Thank you. Committee, any further questions? Representative Turner.
Sorry, you may have said this and I missed it, but this would require them to file to get, is it a license? I missed the nuance that's going to weed out the bad actors here.
Mr. Chairman, Representative, thank you for the question. No, this is not a license at all. Well, what this legislation does, it's twofold. First off, it says that if you are a paid tax return preparer, someone is a taxpayer is coming to you and paying you to perform a service, then you are required to put your federal preparer identification number on their Kansas state tax return. Not only on the federal return, but you're also required to put it on a state income tax return. And what preparers already have this number because it's really the one requirement of preparing a federal tax return, and it's a number that's obtained for free from the IRS when you register with them. So what that does is it helps the state better identify, better track, better see who's preparing tax returns in the state. And then when the state identifies a bad actor, who is preparing returns, an unscrupulous preparer who is doing things such as, and these are listed in the bill, engaging in tax fraud, engaging in other criminal or fraudulent conduct, maybe purposely stating a taxpayer's liability or not signing a tax return in an effort to stay off the books. When the Revenue Department sees that type of activity, it gives the Revenue Department the option to prevent that preparer from continuing to operate by seeking an injunction, a court injunction, and presenting the evidence and letting the courts decide if the preparer should continue to operate.
But it doesn't actually stop them from hanging a shingle and people going in there. They don't know until after the fact that this is downstream. So it's not stopping it up front. It's trying to catch up from the backside to get these folks weeded out.
That's correct. It is a back-end solution.
Representative Corbett?
Just to follow up on the Senate question, I knew he was doing it illegally. What makes you think he's going to put on a correct federal ID number to finish the job? The crime's already happened. I mean, it's a great thought, but if he was honest the first time, he wouldn't be in the spot now.
Mr. Chairman, Representative, that's a good question. And that's something that I think not only tax preparers, but revenue departments and the IRS as well struggle with is how do you identify, usually the word we use is ghost preparers, people who like to stay off the books. And we'll continue to address that challenge. But I think the first step is actually mandating and putting in place some actual some penalties in place if you don't identify yourself. And so I realize this bill is not a cure-all solution, but it is a balanced solution that's really the first step to doing that.
Committee, any further questions? Seeing none, Jeremy, thank you very much for your presentation today and your testimony.
Thank you.
Committee, that is the final or the only proponent I have. Is there anyone else wanting to testify on Senate Bill 47 as a proponent? Seeing none, any testimony or conferees on Senate Bill 47 in opposition or neutral? Seeing none, we will close the hearing on Senate Bill 47. Committee, our next item of business as we begin to look at itemized deductions or standard deductions on income tax. We have a hearing scheduled for House Bill 2141. But before we get into that, we would like to hear from our Kansas Society of CPAs. They do not take a position on 2141, but they did want to offer us a short informational briefing on the bill and some of the downfalls or good things about itemized deductions versus standard deductions. So our next item is a informational briefing by Becky Shaw. She is with BT and Company and the Kansas Society of CPAs.
Good afternoon, Honorable Chair Smith and committee members. I'm Becky Shaw, CPA member of the Kansas Society of Certified Public Accountants. That's the primary professional association representing CPAs in our state of Kansas with over 2,500 members across Kansas. And I'm just here today to outline some considerations for you guys in either increasing the standard deduction available to individuals versus decoupling from the current ruling that if an individual opts for the standard deduction on their federal return, that they must also take that standard deduction on their Kansas return. And again, as the chair said, on behalf of the KSCPAs, my testimony is informational, not authoritative, and KSCPA is not taking a position one way or the other on this. Under current Kansas law, taxpayers must take the standard deduction on their Kansas individual income tax return if they take the standard deduction at the federal level. Since the Tax Cuts and Jobs Act of 2017, the federal standard deduction is now much higher than it was previously, approximately doubling and continuing to increase at the federal level each year as they index for inflation. So there are more and more taxpayers that are taking that federal standard deduction instead of claiming itemized deductions. So as a result, in Kansas, there's a lot more Kansans that are claiming the standard deduction at the state level now too, which some taxpayers may be receiving less itemized deductions than they would have under the old law. A few items that we'd like to note, we'd like to put into consideration, retroactive timing. If there's anything that the committee is considering for 2020 income taxes, that might create an undue administrative burden on CPA practitioners, software vendors, the Kansas Department of Revenue, and any delayed filings for 2020. If you're going prospectively for 2021 and going forward, there should be ample time for everybody to put those items in place going forward to next tax season. So of course, the benefits of the standard deduction option, it is as simple as it can get. Anybody can claim the standard deduction. If it's what you do on the federal side, you just pick that number up on your Kansas return. It would not require a significant change to the Kansas tax filing form. Currently, the amount of the standard deduction is not listed on the face of the K-40, but it is within the instructions. So it's very simple. Those instructions are updated every year. It's very simple for people to refer back to them. Some of the drawbacks of considering increasing the standard deduction, for some taxpayers that still might take that standard deduction, it might be lower than if they had been allowed the option to itemize. For instance, there might be some people who would have a large amount of charitable contributions, mortgage interest, and real estate and personal property taxes, and those items together might add up to more than what the state standard deduction is, where singles, the state standard deduction is $3,000, married filing joint, it's $7,500, married filing separately, $3,750, head of household, $5,500. Some of the benefits for possibly decoupling from this in that if someone took the standard deduction at the federal level, they would have the option of either taking standard at the state level or itemizing at the state level, is that they might be able to create a tax savings for themselves, thus saving some money in income taxes. Taxpayers still need to take the time and evaluate their own situation very carefully if this were an option, just because it does take some time to put together the information that they have to pull together in order to itemize. Some of the drawbacks for potentially decoupling and offering the option between itemizing and taking the standard deduction is that KDOR may need to increase the audits of individual income tax returns in order to confirm itemized deductions. This could be an administrative burden, and there is a fiscal note to consider for the additional personnel for this. Currently, the Department of Revenue accepts itemized deductions as they are taken on the federal return, because we're in conformity with the federal law for that. And rarely does KDOR have to audit an individual taxpayer to confirm those itemized deductions. Decoupling would also require some changes to the face of the tax form. Right now, Part C of the Kansas K-40, where the itemized deductions are, it uses specific references to the federal Schedule A for itemized deductions. So those things would be changed, because if the individual took the standard deduction at the federal level, they would not have that form Schedule A readily available to themselves in order to put those numbers on their Kansas form. Another item to consider, as always, when you're decoupling from federal legislation, things like that, if you decide to recouple later, getting that language right might prove difficult. So with that, I yield my time to questions, if there are any from the committee members.
Thank you. Committee questions? Representative Gartner.
Thank you, Mr. Chairman. Becky, thank you for the overview. Just a question concerning itemization. If we decouple, move that direction, does itemization benefit, who does that benefit most? Is it the lower income wage earners or higher?
It's usually going to be some of the, I would say necessarily higher income, but people that have higher expenditures because they're spending their money on charitable contributions. They've got mortgage interest that they're paying. They've got the real estate taxes by owning property and things like that.
Exactly. Well, because the lower income folks just don't have that many deductions to take or itemize.
Usually that would be correct, sir.
I think I read recently where I saw some information that itemization really about 18% of the tax filers would fall within that 100,000 to 250,000 adjusted income. Does that sound reasonable?
That sounds reasonable. I'm not sure exactly at the state level as to where the entire state of Kansas falls into that. A representative from KDOR might be able to better answer when we're looking at all Kansas taxpayers.
Okay, I appreciate it. Thank you.
Representative Wassinger.
Thank you, Mr. Chair. Would it be true that people who have a massive amount of medical deductions would be using itemized deductions and it wouldn't matter what their income was? It was basically they have high expenses.
Well, the medical deduction, it still has to get over a percentage of people's adjusted gross income, at least when you're thinking about that in relation to what the current federal rules are. It's not all medical expenses that count directly towards adding towards your itemized deductions, but yes, you are correct. Medical expenses count in there as well too. It's just because there's a little bit of a adjusted gross income hurdle. It takes a little more to get there. It's not just if I spend $1 in medical expenses, I have $1 of itemized deductions for medical expenses.
May I ask another question too? Thank you, Mr. Chair. The other question, I was a little confused when you said it would be difficult for people to get a Schedule A on their tax return if they wanted to do itemized deductions. Why would that be? Couldn't you just print them all out? Wouldn't they be there electronically? Thank you, Mr. Chair.
I'm sorry, Representative, can you repeat your question? It's not all coming through on the audio.
Okay, you said, all right, let me look and see where it says it on here.
Representative, get right into your microphone. I think your microphone.
Okay, I'm just looking for it first. Thank you. I'm sorry. You said something about if someone wanted to do itemized deductions, there wouldn't be a Schedule A and it would be hard for them to get one. Do you recall saying that?
Yeah, so
I didn't understand.
Currently, the way the state of Kansas form is written, it specifically references line numbers that are coming off of the federal Schedule A. And in the decoupling discussion, where if somebody were potentially taking the standard deduction at the federal level, they would not have prepared a Schedule A to take itemized deductions. So therefore, they would basically have to, quote unquote, dummy up a Schedule A, go through the steps of preparing it so they would know what would be on that line item at the federal level in order to fill out the state of Kansas form the way it's currently written.
So in other words, they would have to print out a Schedule A and use that for their Kansas taxes or not?
Yes, they would have to fill it out at the federal level, even if it wasn't required because they opted to take the standard deduction at the federal level. They would still have to go through the steps in order to be able to fill out the Kansas itemized deductions. If you move towards the decoupling, yes.
Thank you, Mr. Chair.
Committee, further questions? Representative Mason.
Thank you, Mr. Chairman. On your handout, you have a drawback of decoupling, and you say that decoupling would require changes on the tax form. It would not increased standard deduction require a change on the tax form as well?
I'm sorry, Representative, can you speak into the microphone a little more?
I can, yes, thank you. On your handout, you state that decoupling would require changes on the tax form, correct?
Yes, correct.
And my question is simply, would not an increased standard deduction require changes on the tax form as well?
As I mentioned, currently on the face of the Kansas Form K-40, it doesn't specifically mention the standard deductions. It's within the instructions, but it's not on the face of the Form K-40. So the information is provided as part of the instructions, but it's not written actually on the form. So that would probably not require an adjustment to the writing of the tax form, just a change in the instructions as it went forward.
Thank you. Becky, I have a question. Prior to the Tax Cuts and Jobs Act in 2017, the federal standard deduction didn't match Kansas standard deduction. There's always been a gap. The discrepancy has come from the TCJA, where they took such a massive increase on the standard deduction, therefore increasing the gap that we have now between our state standard deduction and the federal. And if I remember and recall right, the federal standard deduction isn't fixed. It continues to grow. I think you said it's CPI, is that correct?
Yes, they continue to index for inflation.
So as that gap gets larger and larger, essentially Kansas residents or Kansas income tax payers will see an increased benefit on their federal taxes, but if we don't decouple, we remain at that small standard deduction for the state. And the greater that discrepancy goes, the more people, the more taxpayers ultimately would fall into that category. Is that correct?
As the standard deduction continues to increase in each year, yes, there are more people who will not be able to, itemize at the state level due to the increase. With TCJA, essentially, it would be about, there was always a difference between what the federal and the state standard deductions are, but with TCJA, the federal standard deduction nearly doubled and does continue to increase each year. So there is, that growing gap between what Kansas has and what the federal has. And Kansas, I believe, may not have changed their standard deduction since about 2013, when things changed slightly. So yes, there is a continuing growing gap between the Fed and the state levels there.
Okay. And the other question I wanted to ask, you referenced the fact that it's once you decouple, if you ever make the decision to try to recouple, that could pose some difficulties. If we get to a point in the federal code, under new administration, new Congress, different things, whatever might happen in the future, I'm not speculating or predicting here, but if they choose to cut back or hold the CPI, for instance, or if they would cut the rate or whatever could happen. Could you go into a little bit the process of what you mean it's difficult to recouple?
It's just going to be, the administrative language of, kind of what you guys are going through now, and understanding that there's a difference in what changed at the federal level, and take into consideration what it would mean to change it again at the state level. There's always going to be laws that are changing, and as our state representatives, you look at how it affects our state, and you have to take into consideration what it's going to mean to write those things back in.
Okay, thank you, Becky. Committee, any further questions? Representative Turner.
Yes, kind of, thank you, Mr. Chairman. Kind of following up to the chairman's question, this is brought about by the significant increase at the federal deduction, correct? I would think they did that for a number of reasons. One of the reasons you pointed out of us Decoupling would be the additional expense of having to do the audit to verify the legitimacy of the itemized deductions, et cetera. So for whatever it is, there's a lot of simplification in having a good standard. And as the chairman pointed out, this is brought about by that gap being so extended now between the two. Have any states, are you aware, of any states that have remedied it by pulling their standard deduction up proportionally so that that relationship in proportional levels stays similar?
Some different states have different starting points for what their, taxable level is. For example, the state of Colorado, it starts with what federal taxable income is. So they're automatically staying coupled with what the federal standard deduction is, just by having that being their starting point. There are some states that have changed a little bit into increasing their standard deduction, but I don't believe the states around us have necessarily gone to the extent of doubling their standard deduction. Most of the states around us may have remained somewhat, I don't want to say stagnant, but closer to what the standard deductions were prior to the TCJA.
Thank you, Representative. Committee, any further questions? Seeing none, Becky, thank you so much for your briefing today. Thank you for joining committee.
Thank you.
Committee, we will now move on to our hearing for House Bill 2141, and I would turn to the reviser for an overview, please.
Thank you, Mr. Chairman. House Bill 2141 would increase the Kansas standard deduction starting in tax year 2021, which is the current tax year. And these changes would remain into effect going forward. The single filers would be increased to $4,000. The married filers would be increased to $8,000. And the head of household filers would be increased to $6,000. Currently, the single is $3,000, married is $7,500, and head of household is $5,500. And with that, I'd be happy to stand for any questions.
Thank you. Committee, any questions? Seeing none, we will move on to the fiscal note, and I would recognize Kathleen Smith from Department of Revenue.
Mr. Chairman and members of the committee, House Bill 2141 would decrease the state general fund revenues by $47.5 million in fiscal year 2022, $36.9 in fiscal year 2023, and $37.3 million in fiscal year 2024.
Thank you. Committee, questions? Representative Wassinger.
Mr. Chair, Kathleen, you do such a good job. Can you tell me how you got together those numbers?
Absolutely, Representative. What we did is we took the 2019 tax returns that had been filed through December 31st of 2020, and we simulated this tax or this increase on the standard deduction to come up with these with this fiscal estimate that we have. So everybody that's claiming standard deduction in 2019 for single, we increased from 3,000 to the 4,000 and so on to come up with our fiscal estimate. So we're using actual tax return data to come up with our estimate.
Thank you. Thank you, Mr. Chair.
Thank you. Kathleen, I had a question regarding the 47.5 and then it drops. And then it looks like it appears to continue to grow in the out years. What is the reason for that initial drop?
Fiscal year 2022 includes 100% of tax year 2021 and then 30% of tax year 2022. And then as we go forward then for the fiscal year 2023, we level off and we say 70% will come in based upon tax year 2022 and 30% for tax year 2023. So it kind of levels off. So the first year You do see that bump because of the full fiscal year or the full tax year effect for tax year 2021.
Okay, thank you. That makes sense now. Committee, any further questions for Department of Revenue? Representative Turner.
Thank you, Mr. Chairman. You know, the testimony we just heard talked about the cost. So I guess my question is, in your analysis, you don't consider what simplification benefits there might be from raising a standard. You look at it strictly as dollars and cents, right? Follow me?
I believe so, and that is correct. While there will be an administrative cost to the Department of Revenue to increase the standard deduction, it will be lower or smaller than the administrative cost that it would take for us to decouple on the itemized deductions. On the standard deduction, increasing the standard deduction, what we have to do is we have to change the instructions and we have to test to make sure that everything is correct. With the itemized deductions, there's going to be more work because we're going to have to audit those returns. We cannot now rely on the IRS because those people may not be claiming itemized deductions at the federal level. So we can't rely on the IRS to do the auditing for us. We're going to have to do the auditing ourselves. And so therefore there's an increased administrative impact if we were to decouple from the itemized deductions.
Has anyone quantified what that impact may be?
The administrative impact that we have on for this specific bill, I believe, is around $20,000. If we were to decouple from the itemized deductions, a minimum of $200,000, a minimum of 3 FTEs we would need for decoupling on the itemized deductions.
Well, thank you for that. And thank you, Mr. Chairman.
Committee, further questions? Representative Day.
Thank you, Mr. Chairman. How many audits do we perform at this point in time? Is that able? Are you able to quantify that?
Representative, for as far as the individuals, I cannot quantify that, but we do rely on the IRS to do most of the heavy lifting. And if they make changes to the federal income tax return, which would then affect the state return, those changes or those changes flow through to Kansas, and then we're able to send out notices as well based upon the changes that were made by the IRS.
And would there be a standard annual level of audit that we'd be going through moving forward if we do decouple?
I would assume so, yes, Representative.
Okay, thank you so much. Thank you, Mr. Chairman.
Any further questions, committee? Seeing none, thank you, Kathleen. We will turn now to our proponent testimony, and we'd like to welcome to committee Representative Jim Gartner.
It's already on. Thank you, Mr. Chairman, members of the committee. I'm here today to talk about increasing the standard deductions. We'll have a bill, I assume, later on in the next couple of weeks, Senate Bill 22, that has itemization in that bill at the present time. What I wanted to point out to the committee members, and you've heard this information already by the accountants and some of the numbers that I've accumulated over the last 2 to 3 weeks. And my hope is just to make a comparison when we get to that point. If we're going to indeed cut taxes, maybe we ought to look at increasing the standard deduction. Number one, and it's on my testimony, but about 1% of tax filers below the median income would benefit from itemization. Very few. The question I asked the accountant's representative, I've seen data that basically says that the benefits really of itemization flow to about the top 18% of taxpayers, income earners, that top, and specifically between $100,000 and $250,000. The projection is only 6.6% additional taxpayers would benefit from itemization as it's presently spelled out in SB 22. We've already heard Kathleen talk about the 3 FTEs, the money, the possible resources required at the department if you decouple and go with itemization, where it would be very little if you increase the standard deduction. I think one of the key, it's pretty simple. If you increase the standard deduction, basically everybody gets some benefit from standard deduction, in increasing the standard deduction. I looked at the fiscal note on Senate Bill 22 for itemization, and I believe in the out years it's about $61 million, around there, pretty close. And so what I wanted to do is, if I backed into that $61 million, what could we do over and above what's in House Bill 2141? And we could raise the married filing jointly to $8,500. We could married filing separate, the $4,250. That would apply to singles also, which presently it's $4,000 in this bill, but I was trying to spread it throughout the different standard deduction rates or classifications. And the head of household would go from $5,500 to $6,500. The fiscal note on that, again, with the 30%, 100% 1 year, and then 30% is pretty high. The first year is $73 million, but then it levels out at $57 million. So it's roughly $4 million cheaper than itemization, and continue to increase those standard deduction rates. As you can see at the bottom of my testimony, there's just a couple thoughts that I'd like to share with you. And you know, what we're going to be doing over the next 2 to 3 weeks is looking, and we've already started looking at a number of tax bills. And of course, all those tax bills are going to have an impact on our state ending balances for 21 and moving forward. You'll be asked to conform, and in some cases you'll be asked to decouple what itemization is asking you to do. And you'll hear maybe we ought to carry back and carry forward net operating losses. So we have a lot that we'll be discussing over the next couple weeks. And a thought that I read, or a quote that I saw the other day, and it was in a presentation from the Urban Institute. The gentleman was making a presentation, and I thought this made sense for me anyway. As we go through this process, ask yourself, do these changes fit Kansas's budget and values? In other words, do these changes, how will these changes, what will it cost in the millions of dollars? And the question should be asked, can the state afford this? And the specific changes, you might ask, who benefits? Is it the multinational corporations? Is it the tax filers of the state of Kansas? Is it small business, medium business? But hopefully you'll ask yourself that question. And the final one is that how we want to spend our limited resources? So with that, Mr. Chairman, I'd stand for questions.
Thank you, Representative. I got confused there which bill we were on, so.
Itemization, standard deduction.
Committee questions for Representative Gartner. Representative Blex.
Thank you, Mr. Chair, and thank you, Jim, for your presentation. Can you enlighten me a little bit when on item number 2, the benefits of itemization will flow to the top 18% of the taxpayers? Does that account for the amount of tax they pay or the amount of income, overall gross income?
I believe, Representative Blex, that looks at the amount of tax filers that itemization would benefit.
Okay, thank you for that. I'm thinking primarily the farm community that certainly benefits from itemization, and in a lot of years they're certainly not in the top 18% of paying taxes because of the highly fluctuated income and losses on that. So that's what I'm trying to determine to see where they fall in, and I wouldn't think they'd be in that top 18. I may be wrong.
Well, again, Representative Blex, that was looking at between $100,000 and $250,000 of income.
Okay, thank you for that. Thank you, Mr. Chair.
Further questions, committee? Representative Turner.
So, thank you, Mr. Chairman. So at the end of your testimony, you asked the question, can Kansas afford this? And I think the numbers she put out were 47 million, 36, 37 kind of things per year?
Yes, Representative Turner.
Yes. So what is the answer? Can we afford that, or is there another?
I'm not sure. That's just the question you're going to have to answer as we move forward.
All right. Okay. Thank you.
Representative Kessler.
Thank you, Mr. Chair. Representative, I'm still trying to wrap my head around this just a little bit. As a small businessman, I itemize federally, itemize state. Let's say with the federal deduction, I decided to go with the standard deduction, but I've always itemized state in the past. I mean, I don't see really how this has really changed anything. How is this really, other than maybe some administrative cost, I don't see how this has really changed anything. How is this costing Kansas more money if this is what I do all the time? You understand what I'm saying?
I think so, Representative Kessler. I think today, I might be wrong on this, someone can help me. If you take the standard deduction on the feds, the federal form, unless we decouple, you can't itemize on your state. Is that correct, Mr. Chairman? I thought that's the way it worked.
Yes, it's my understanding.
If I may. Correct, I understand that. I just mean if I itemize federally, I itemize on the state as well.
Yes.
Let's say this is something I do all the time as a small business owner. But for this particular case, let's say it's more advantageous for me to take the standard deduction federally. But as I've always itemized Kansas, I just don't quite wrap my head around the fact that how that's really adding any undue burden to the state as far as cost, other than administrative, because it's something that I've always done.
That's something, yes, Representative, you've always done, and if you continue to do that, it's not going to add additional cost. But when we decouple and we pick up a number of 6.6% of tax filers itemized, that number used to be probably in the double digits, I would guess. Don't quote me on that. Maybe 13, 14, 15%. And then when the Jobs Act was passed in 2017, with the higher standard deduction on the feds, that decreased, I think, in the single digits now. So if we no longer, we decouple the feds on, for all those filers, we'll have to, we're going to have to, the Department of Revenue is going to have to pick up, add FTEs to do their own auditing process. Now, it's not going to affect you, that you've done it before, but both federal and at state. But in the past, the feds always picked up, because we conformed, so they always picked up the auditing process, where now the state's going to have to do that.
Thank you, Mr. Chair.
Representative Woodard.
Thank you, Mr. Chair. Thank you, Representative Gartner. This might be a question for you or Revenue, but if you know off the top of your head, do you know how many Kansans or what percentage of Kansans take the standard deduction versus the number or percentage of Kansans that take an item that actually itemize?
I think Representative Woodard, right, that might be a question the department might be able to respond to.
Kathleen, are you there? Did you hear Representative Woodard's question?
Yes, Mr. Chairman. For tax year 2019, there are around 92% of our taxpayers that claimed the standard deduction and around 8% that claimed itemized deductions.
Thank you. Thank you, Mr. Chair.
Committee, any further questions? I have just one. Representative, don't hit your button quite yet.
Hey, Mr. Chairman.
I just want to make one comment. Not really sure if it's a question or not, but House Bill 2141 proposes a $1,000 increase in the single, a $500 increase in the married filing joint, and $500 also head of household. That's stagnant. So even if this bill would pass and become law, the fiscal impact to the state is what it is. But that gap will still continue to grow. And would you agree that, if you assume right now it's at, was it 24,000, the federal standard deduction? If you assume 2% CPI, which might be a little high, but that's roughly about $500 a year. As that grows each year, do you not see a need for Kansans to itemize if they do have the mortgage interest? Yes, they're getting a higher credit back from the federal, but the federal tax rate is also much higher too. So as that disparity gets even greater, I would say that 92% number would come down in the out years. If you look 10 or 15 years out, we're going to see many more Kansans needing to itemize their mortgage interest as the inflation begins to impact their household situation. $1,000 and $500 doesn't really feel like it's going to mean much in 10 or 15 years.
Good point, Mr. Chairman. You've already pointed that out with the CPI inflation that's going to continue to grow. And if you look at the even the numbers in 2141, they're going to stay stagnant unless we as a state go back, look at our fiscal situation every year or every 2 years and say, okay, we want to increase the standard deduction to try to close that gap. I mean, it'd be nice if you could close that gap in 1 year. I think that would probably cost about I don't know how many millions and millions of dollars to do that. But we could, that's why I like the standard deduction, because we as a legislative body, the tax committee, looking at where we are fiscally as a state, we could say, well, let's let's increase it another $500 this year. We can afford it. So let's move forward. You know, you made the point, and yes, mortgage interest is deductible, of course, but the loan rates, I mean, I would say that's probably right now as small as it's been in years, because the interest rates are 2.25%, 2.5% on a mortgage. So, but we know how that works. It will change in the future, but.
Thank you. Representative Clayton.
Thank you, Mr. Chair. And this question is actually for Department of Revenue. Can you tell me how often federal tax code and tax law has changed over the past 10 to 15 years so that we can kind of project this out? Although, you know, heaven knows it's difficult for us to plan on anything the federal government does, but, you know, some help would be good.
Yes, Representative. The federal tax law changes every year, so I mean, depending on what specific piece of it, I mean, I could look into that for you. But like we've already stated, I think with the federal standard deduction, it is increased each year by the federal government based upon the law that they have. So it is increased by almost $500 each year.
Thank you, Kathleen. Committee, any further questions? See none. Thank you, Representative Gardner.
Thank you, Mr. Chairman.
Committee, I'd also turn your attention to written testimony from Ronald and Novella Ritchie as proponents, and I show no, is there anyone wishing to testify as a proponent for House Bill 2141? Seeing none, I show no neutral or opponent testimony. Is there anyone wishing to appear as an opponent or neutral? Seeing none, we will close the hearing on House Bill 2141. Committee, we have one bill, one final item to take up. That is House Bill 2070 for action. And I would turn to the reviser for a brief overview on House Bill 2070.
Thank you, Mr. Chairman. House Bill 2070, if you recall, generally prohibit a seller in a transaction from imposing a surcharge on a credit card holder who elects to use a credit or debit card in lieu of payment by cash, check, or similar means. Pursuant to the statute, a surcharge is any additional amount imposed by the time at the time of sale by the seller that increases the charge to the buyer for the privilege of using the credit card or debit card. Under the bill, the exception from the prohibition would be expanded to include not-for-profit post-secondary educational institutions and educational institutions otherwise exempt from the Kansas Private and Out-of-State Post-Secondary Educational Institution Act. Thus, these institutions would have the ability to impose a surcharge when payment is made with a credit or debit card. Additionally, during the hearing, it's been a few days now since the hearing, I believe there were some questions about the statute. My recollection is the statute came into existence in 2000. As part of the statute, previously, institutions were not required to accept credit cards. The statute, the other part of the statute that's being amended, it does require the acceptance of credit cards. However, as a especially as a trade-off, they allowed them to add the surcharge. So that's kind of the genesis from what I could see from the history of the statute. I know there was a little bit of question into that when the hearing took place. And with that, I'd be happy to stand for any questions.
Thank you, Adam. Committee, any questions for the reviser? Seeing none, thank you. Committee, what are your wishes with House Bill 2070? Representative Epley.
Thank you, Mr. Chairman. Did you want to go, Mr. Okay. Thank you, Mr. Chairman. I would like to move House Bill 2070 out of this committee favorably for passage.
Thank you. And a second from Representative Mason. Committee, any discussion? Seeing none online and none virtually, Representative Epley, you may close.
Thank you, Mr. Chairman. Realizing this was a carryover bill from last year, it passed this committee unanimously last year out of committee, and then got COVIDized like a lot of good things did. So we're hoping to just move it a little further along this year. So again, I would close my motion for moving it out.
Thank you, Representative Epley. Committee, you've heard the motion. All those in favor, please signify by saying aye.
Aye.
Opposed? Motion carries. Thank you very much. Committee, that concludes our business for today. Is there anything that needs to come before the committee? Seeing none, we are adjourned.